Good afternoon, everyone. Glad you can make it. I'll call to order the Finance and Labor Relations Subcommittee. Are there any disclosures of pecuniary interest and general nature thereof? None noted. We don't have any delegations. Item 4.1 is the draft 29 consolidated financial statements. And we have a motion that the presentation be heard. Who would like to make the motion? Of Councillor Ritzma. All in favor? Thank you. I'll turn it over to our acting director to introduce our guest.
Thanks, Tom. So just a couple of things on the report before I turn it over to Cameron. I've noted a couple of significant changes in the report. So you'll see that the bank balance is down, but the investments are up. So last year we did give $7 million from our reserve fund bank to Royal Bank Securities to invest. So that's been going well. And in turn, you'll notice that our surplus is down from 2018, but it's in the more normal range because in 2018, we had 2 large land sales and that impacted our revenues, made them go up. So I will turn it over. Cameron Johnston is here from Millard's Chartered Accountants. This is the 6th year that Millard's has done our audits. It's actually the first year of a new RFP award. So I'll turn it over to you, Cameron, to go through the statements and then if there are any questions.
Thanks, Janice. Good. Can everyone hear me okay?
Yeah.
Well, good afternoon. It's my pleasure to present. It's a draft financial statement for the corporation of the city of Stratford for the year ended December 31st, 2019. We've attached on the draft report is a draft auditor's report. And it is an unqualified opinion. So it is a clean audit opinion and we'll be attaching an approved date once that is satisfied to this report. The financial statement itself continues similar format to what we have seen in the past as far as the financial statements are concerned. The first primary statement is the consolidated statement of financial position. So these are our assets and our liabilities in the year. And as Janice quickly highlighted, as you can see our cash balance, we've gone from 33 million down to 26 with the investments. Overall, our land held for resale has remained the same at the end of last year, 1,045,000. You can see that 1,045,000 for the current year. Our total assets, 106 million, very, very comparable to 106 million the year before. Liabilities. So these are our current liabilities for the most part, where they reflect our accounts payable are all of our year-end payables, any amounts that we have related to construction work and things like that, anything that's current. Deferred revenue, we have a note referred to that, but the majority of that is typically, that's where you get funding in, development charges, gas tax, where these monies have been received and are for a specific use coming forward. So they do meet the definition of a liability. So they're reflected on the financial statements as a liability. You can see that number is $20 million. Under PSAB, we do a solid waste landfill estimate. So the estimate is $2,094,000 in order to close the landfill and to maintain it in the future. Similar to employee benefits payable, that's a consideration for the total liability going forward. And then our long-term debt, you can see that balance went from 68 million down to $62 million. So overall, we have a net debt position with the city going from 11 million down to $5 million. Our non-financial assets, so these are our financial assets that we have. And you can see they're made up of prepaid expenses, inventory, some other miscellaneous items, but the big one is the net book value of our tangible capital assets. So our net book value of our tangible capital assets this year has gone from 288 million up to $297 million. It's a significant dollar amount if you think about it. Our accumulated surplus is a total number, and we'll see that on the next page, but we've gone from 278 up to $293 million. I'll highlight this going much faster. The next page highlights our consolidated statement of operations. So this brings in a summary of our revenues and expenditures. Again, these are all done under a PSAB basis, Public Sector Accounting Board. So we do recognize liabilities, which we discussed, such as the landfill closure, future benefits, et cetera, that you don't normally see on your cash basis of statements. So overall total revenue in the year, 137 million, 137,999 compared to 142. The big change though is, as Janice highlighted, you can see is our other revenue number, right down second from the bottom on the income. We 12,771 down to 5,159. I'm guessing, Janice, without even looking at, that's where the land sales were sitting from the year before. Our expenditures in the current year, reasonably consistent with growth. We've gone from 117 million up to 122 million dollars in the current year. So we have an annual surplus of 15,114,000 dollars on these financial statements. We have an opening accumulated surplus of 278. So we're overall 293 million dollars is our ending accumulated surplus. And just very briefly, the next page, just sort of a funny little statement. It's a statement of changes in net debt, but it kind of gives you a bit of an idea of our capital assets. You can see that during the year, we constructed, built, acquired 21,521,000 dollars worth of tangible capital assets, along with some movement from our work in process. Of our total assets, we actually depreciated them 8.7 million dollars. We had a loss on disposition, which would be normally expected, of $1,099,000, and the proceeds from some of the sales of some miscellaneous items, 250,000. So overall, pulling out the tangible capital asset activity, you can see our annual surplus was changed by a total of 6,181,000. And all this statement does is just bring us down to our net debt number that we saw on the earlier page, but it sort of briefly highlights a little bit of the financial statement activity in the year, which is fairly significant. I can take you right to the very, I was going to say second to last, third, bear with me. Notes to consolidated financial statements. I'm just looking for my tangible cap asset spreadsheet, Janice. Second to last page of the package that you've got. And you can see it highlights our cost, our accumulated amortization of the financial statements. And you've got a fairly significant asset base. So our total cost in the current year, including work in process, you can see the number is $478 million. A substantial cost base. So getting close to $500 million worth of cost of our assets. Now with amortization, so consideration, if you think for age and usage, that's the number that goes down. We've depreciated $180 million, so we're at $297 million of our tangible capital assets. On the next page of the statement just highlights our sources and uses of cash for the year. I'm not going to go through this in any detail, but it just shows how things are changed. And our usage of cash at total at the bottom of the statement, you can see is we've used up $6.9 million worth of cash in the current year. That's also including increasing in our investments of $7 million. So overall, we're at a cash balance of $26,160,000 compared to $33 million. The rest of the financial statements highlights notes to the financial statements. I'm not going to go through those in any great detail. They're fairly self-explanatory, but overall, statements look pretty good. We worked with Janice this year to get them to balance. It's been an interesting year with COVID and everything that's happened. Tell you a little bit about the progress. So we actually started doing some planning work at the end of November 2019. Commenced the interim work on December 11th, on site December 17th and 18th, if I've got those dates right. And then we actually started our year-end work right around May. And that was all because of COVID coming into play. Normally, we would have been out considerably earlier than that. We were May 28th, I think June 1st, June 3rd, came out to the Stratford offices. After that, I think we were out one more day. And then following that is most of the work was done in our office, so remotely requesting information, working with Janice, Rod, and staff to get all the information. There's quite a few more challenges because of COVID. It's always, we find that it takes a little bit longer to get information throughout the course of the audit. Normally where we would walk into Janice's office or to Rod's office and say, can we see this? And we get a document within 10 seconds. Now you ask for it on Monday at 3:30 and you might see it, Tuesday at 9:30 or 10 o'clock in the morning. All depends on the timing and when they check their emails, etc. And we're the same at our end too. Janice can ask for some information, and anytime you do it remotely, it always takes a little bit longer. But then we also worked with Janice for the preparation of the financial statements this current year and tangible capital assets as well, all the way into September. We've kept our staff fairly consistent. Nick is a staff member that joined us last year, so Nick was on site. We also had Samantha, who's a manager in the office, a professional manager. She was working on the engagement, and then Josh McMaster as well, who's worked on the engagement the last few years. So overall, pretty good. May I ask through the chair, I guess, and Janice, if there's any questions regarding the financial statements?
Any questions or comments by anyone? I was going to ask, when you talk about depreciation, like how much do you decide? Like, I know in business, it's a percentage depending if it's computers or whatever it is. How do we do this in the municipal world as far as depreciation?
Oh, actually, it's exactly the same logic. There's a set of standards that are in place. If you go to note 1 of your financial statements, and 1E highlights the percentages that are used. It's on a year basis, so it's the similar ideas to percentages. And you can see buildings and buildings equipment are 15 to 50 years. So quite often a building, like in a for-profit company, a building is going to be 2 to 4%. So you're looking at a similar spread. Equipment, vehicles are 30%, quite common for a vehicle to be at 30%. In this case, we have our vehicles amortized between 2 and 25 years, depending on the type of vehicle. So we've got a little bit more of a spread. Machinery, equipment, so it's all the same idea. And it follows the tangible capital asset policy that was put in place several years ago with the municipality. And they're fairly consistent. The interesting thing is when you look at roads, bridges, bridges are pushing 60 to 75 years. Water and wastewater, 35 to 100 years, depending on what it is. And it's always been an interesting one where you're a water line, the life of a water line is much, much shorter than a storm sewer, for example. But, if you're going to dig down in 20 years to replace a water line or 30 years, you're probably going to replace the storm sewer at the same time, that type of thing. So those are run fairly consistent. One of the things that was really interesting, when this first came up, I think it was one of the municipalities in Australia went to court and argued that these aren't assets, these are liabilities, because the town or the city is responsible for maintaining them. But the court's argument at the end of the day was, no, they're absolutely assets. So the assets to the ratepayers of the municipality, which is where the city comes in. So they are considered tangible capital assets.
Yeah, well, thank you. That was good.
Yeah.
Graham has a question. Unfortunately, we can't hear you, Graham. There you go.
Sorry about that. With respect to the tangible assets, I think there was a change in tangible assets from last year to this year of somewhere in the region of about 8 million or something like that. Did I read that right? Or
just give me 1 second. Acquisition of tangible capital assets in the current year, acquisition was about 21 million. We depreciated them 8.7 million.
Okay.
Amortized the assets in the current year.
So what would be examples of what we accumulated in the past year?
Oh, the purchases?
Yeah.
Okay, here, hold on 1 second.
Just examples. I don't need
Yeah, just in summary version, like, land improvements, for example. So work done on land was very small. Buildings and building equipment was 8 $8.5 million in the current year. Big expenditures, you're typically, infrastructure, roads, 4.1 million. Water, wastewater facility work, $5.6 million.
Okay.
Okay, so you can see it's spread right across everywhere. So,
Thank you.
I was going to ask Cameron, and I know you talk about fraud in your report. How do we protect ourselves against someone in some department that would be doing something unusual? Like, I know it's hard for you to find it, and you explain that in there, but what safeguards do we have that there isn't something unusual happening financially?
well, where you look to it is you look to analytic procedures done by management. So senior management taking a look at departmental analytics, because you run by budget. So typically anything that deviates significantly from a budget, it means something could be off the trail, and you find out why it is off the trail. And then you also look in departments as you look for proper approvals in the process. So if it's a staff member that is buying extra road salt and it's not road salt, okay, so where is the approval for that purchase? So who's approved the purchase? Has the manager approved that purchase? Does it follow in line with the budget for the year? And then also, is there a receiving report that's attached to it to make sure that the receiving report shows that the salt was actually received? That's where you come into play. When you get into a higher level where there's a manager that is behind something, that's where the really key is analytics and the basics of controls. We've come across a fraud before where dealt with the analytic procedures in a municipality where it just didn't look right. And when you did some digging, well, it turns out the purchases never existed. So, and that's critical in following in the process, but you've got the controls that are in place that, invoices are properly approved. They are approved by the manager. You have trust in your managers that, they're not going to cheat the system. And anyone that does do it, you do get caught eventually. It's surprising what senior staff will find at Janice's end in Janice's department. And then it's also surprising though what we will find as far as a deviation is concerned.
Great, thank you. Any other questions or comments? Well, we have Cameron here. Janice. I think you have your mic off, Janice.
Since Cameron touched on the land held for resale, I'll just make a comment. It didn't change in 2019, but as of right now, that amount is down to $347,000. We had 2 large sales in 2020, so it just highlights that our industrial land is depleting.
Right. Any other questions or comments? If not, we have a staff recommendation that the draft 2019 financial statements be approved and the 2019 audit report be received for information. Moved by Brad. I don't need a seconder, I don't think. Any other questions, comments? If not, all in favor. That's unanimous. Cameron, thanks for coming up. We appreciate your work, and we'll talk to you again shortly, I'm sure next year, if not sooner.
Okay, thanks. Have a great afternoon.
Thanks, Cameron.
Thank you.
Item 5.2 is the operating budget variance report as of September 30th. And Janice, I'll turn it over to you to highlight, we've talked about it before, but if you could highlight some of the things that are obvious or not so obvious.
Yeah, so in the analysis section, I have gone through department by department and highlighted a few things, areas of concern. In the building and planning department, we expect that budget is not going to be met at the end of the year. There has been a shortfall in permit revenue, and we expect that to continue. They have reserves, so building permits in that department are to run like an enterprise on their own. They have reserves. Any surpluses from permits go into that reserve. This year, they will be depleting that reserve, so that reserve will be gone for 2021. And that department will need to look at building permit fees next year. The Anne Hathaway daycare, you can see that it is very much over budget. But as I had explained to Tom and Dave, the child care division has not issued any monthly payments to any child cares in the city of Stratford, including the Anne Hathaway daycare. So they are reconciling those accounts, trying to look at when they were closed, which ones did emergency child care for free, and they're going to hopefully issue those payments in this last quarter of the year. The other areas are fairly self-explanatory. We are looking at about a $1.6 million surplus right now, but we do have 3 months left. Normally, this is the last quarterly report that we do, but we are going to do an October 31st and a November 30th one, because I think it's important that we know where we're sitting and how we're trending towards December 31st. If there are any questions, I can take those.
I was just going to ask, it goes back to 2019, but the surplus we had there was like 1.3. Have we allocated that? I know we talked about going to the Queen Street project, but what's happened with that surplus from last year?
So the 2019 surplus was $1,035,000,
Yes.
and it was put into a tax stabilization reserve fund.
Okay.
We anticipated having to use that for our losses due to COVID-19, but at this point we don't need it, so it is sitting in a reserve fund. It is available for use. It has never been earmarked for construction. I don't think it will be earmarked for construction.
Okay. No, I was just curious. I thought of that in the last. So any questions or opinions or on this report that we have right now? I think you've highlighted it pretty well, Janice. And if there's no other, we do have a staff recommendation that the operating budget report as of September 30th, 2020 be received for information. Moved by Graham. No other questions. Do you have a question, Councillor Gaffney? Go ahead.
So if that 1.03 million is still available, and this may be just a question of general interest, should or could we look at Queen Street again, moving ahead with it?
Yeah, well, go ahead, Janice.
Yeah, I think because we put it in, it was a surplus that we put into a tax stabilization reserve fund, and Queen Street will come forward as a project with long-term debt financing. I would be more inclined to save that $1 million in case you need it for tax reductions in 2021.
Okay. That's a good point. Any other questions or comment on the motion on the floor? If not, all in favor? Thank you. Anything else for finance? Janice, I was just going to ask, I don't need a big report, but how is the budget returns coming from departments? Just can you highlight what kind of, and possibly you talked to us about our insurance. Just basically, can you talk to what's happening with increases all over the place with insurance rates with municipalities and with the budget, if you could just generally tell us what's happening?
Yeah. So insurance at this point, we've heard from Or Insurance and BFL that our insurance will likely go up 25%, which is about $150,000. We also have heard from our benefit providers that our benefit costs are going up about 20%. There's still a few months left in the year. It may go down a little bit, but our usage is much higher than our premiums. We can look at another carrier, but our usage goes with us. And so our claims go with us. So we won't really save any there. So we are seeing large increases there. Budgets are not coming in under 2%. They are coming in quite a bit higher at this point. So staff have been working at putting together a list of things that we can cut if we have to, and services that can be cut and options that way. But budgets are tough, and they are not coming in at 2% this year.
Okay. I got Graham and then Katyan. I'm sorry, I got Councillor Pritzma. I'm sorry, got you mixed up there. You look so much alike, you two. Martin, go ahead.
Okay, so thank you with regards to those numbers, Janice. What's the main driver with the insurance going up by that amount?
I don't think we are the only ones. I think it's an industry standard. I have talked to the town of St. Mary's, the county of Perth, and the lower tiers, and they are all seeing increases of about the same amount. You know, I've seen in the Toronto Star people's insurance going up 3 times what it was.
What's the reasoning behind it? I understand it's more global in the province. I've seen that, but what is the reasoning behind it?
Yeah, that I'm not sure. And I think what we'd like to do is have Rick Orr come to a subcommittee meeting and maybe he can chat to that point.
Thank you.
Tatiana, you had your hand up.
Through the chair, could you just kindly confirm if the motion regarding item 4.2 was carried?
Yes, it was. Sorry. So our next finance subcommittee is November the 17th, 2020 at 3:30. If there's nothing else for this committee, I accept a motion to adjourn, Brad. Moved by Brad. All in favor? Thank you very much. I really appreciate everyone's input.